Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Well, the Bull came out roaring today, out of left field. S&P futures were up over 100 points at one point. Remember, we hit that low at 55.09, and we were about 280 points away from the low to the 10-bar weighted moving average on the daily. Now we're above that. We've rallied all the way back up, but fear not. Based upon my pattern on the weekly and on the daily, I am looking for a push up to 58.50. Was my first target was 57.80. The second target is 58.50 to 58.80. I think once you get to that level and the S&Ps get to 50 points above that 10-bar weighted moving average on the daily, I will tell you that I think it's time to roost. Now, we may have the low of 5,500, but we're going to go right back down and maybe fill these gaps that we had from last week and then today. This is a big gap here, and normally you get three gaps, and then we should drop here. So, again, I'm looking to see if tomorrow we get one more push up between now and Wednesday or Thursday to that 58.50, 58.80, 58.90. A lot of great patterns today. Little pissed off at myself on Tesla today after the opening. Some divergence patterns that didn't really work out, but then there was a 15-minute time frame that pulled in. You got to use stops in these types of markets, in any markets for that matter. You can't fight it. Nobody's bigger than the market. Great pullback in Tesla around 12. It ran about 4 or 5, and another long at the end of the day around 3.15, and it rallied about $4. But again, Tesla, remember about 2 weeks ago, a week and a half ago, Tesla was trading 222, and in the pre-market, the low actually in the session was 217, and the low here in the pre-market was 215. How do I know? I was long Tesla, real cash, real money, and basically I was looking for a move up to 240, 250, and today we exceeded 278. I think if you do get one more push up in Tesla tomorrow, you're going to get an overbought condition. There's a ton of overhead resistance here in all these names, in the index futures, in the underlying ETFs. There's so much overhead resistance. Now, at one point, we went from 61.66 down to 55.09, 55.09 up to 58.25. I still think tomorrow, in the next couple of days, if we rally anywhere between another 40 to 80 points on the S&P, I think that should do it. I don't see 6,000 in sight anytime soon. I know the pattern that's coming up. We're going to you're getting overbought on the daily into the negative MACD, and I'll show you this on the weekly, and I think we get another push down. Today, I'm going to show you that today, when at 10 o'clock, when the 30-minute time frame reversed to buy on the spiders, and then at 10:30, and then the Qs, the Russell, and the diamonds, when the pattern set up on the 10:30 bar, when the 10:30 reversed to buy on the spiders, Qs, diamonds, and Russell, you knew the trend was up. Right, all three time frames aligned. We got the pullback at 1 o'clock on the 15, but the real pullback was at the 11 what time was that? The 2 o'clock pattern when the 30-minute time frames pulled in beautifully into the positive MACD, rising ADX on the 15, the 30, and the 60-minute time. Actually, the 30 and 60, not the 15, but the 30-minute time frame. I'm staring. I'm like, these 30-minute time frames are going to turn up. The S&Ps were trading 95.5, 96. I was looking 94.5, and they rallied from 95.5, and they rallied up to 24, 25. They rallied 30 points like that in a matter of about an hour and a half. Actually about almost 2 hours towards the end of the day. The 355 bar was the high bar on the day. But again, A lot of great patterns today. This Tesla and I, we're gonna have a run-in by tomorrow. Tesla and I, okay. Again, it's important when you're trading. You got to apply stops. You can't be shorting something here and watch it go up, $5-6 against you. You have to be disciplined. If you're short, you add and then you place your stop. If it doesn't work, there's always another trade, right? But you can't let it get out of control, and that's what some people did today. But you got to learn from this. Okay, you're not bigger than the market. If I don't care who you are, all right. Preservation of capital is key. All right. So let me show you what happened today. But again, looking at the bigger time frames here, I'll show you the spiders. You can see here the spiders on the. We're going to go here the daily. Okay, we'll go daily and then we'll go weekly. Now the dailies are going to reverse to buy right here come tomorrow morning. All right, which means now that you have what's called the buy disconnect, the 15-minute time. The daily is going to reverse to buy on the 15. The daily is going to reverse to buy, and it's going to correlate with the monthly. But look at this pattern here. Okay, look at this pattern. Now remember, see this gap here? You got a gap here. Okay, on the daily, this gap's going to get filled right here. Okay, eventually. Before now, with the daily reversing the buy and the MACD is positive from below. Look at this low here. On this low, 549.68. This low here, at this point, when you were from this point to here, you were about 28 points from the 10-bar moving average. Okay, right now on the spiders, you can see the 10-bar moving average. We're above it. The price is above it. So we came all the way back here. Now, when the daily reverses to buy here and we get another push up, we'll get a drop. Okay, but these lows should probably hold here for a while. The thing that you got to look at here is when you get overbought into the 80-90 range, 85-90 range. Look at this negative MACD. Look at this, all this overhead resistance here. This is a bear flag. Okay. Now, when we were trading here, okay, we were 40 points from the 10-bar moving average. Now we're only 10. So if you go up another 10, even if you go up another 10, look at this. 599 is where the weekly would. So the weekly doesn't go negative and then positive. This is significant overhead resistance here. Okay. And if you look here, you can see that if and when the daily gets to a 90 overbought reading into this negative MACD on the weekly, okay, even if we get one more push up here, I think the next stop is going back down. I'm not saying we're going to make new lows, but we're going right back down. Okay, MACDs are positive from below the pivot. Okay, deeply positive from below the pivot. So again, if we get another push up here, all right, maybe another 50, 60 points on the S&P, and I'll show you what I mean. If you look here on the S&Ps and look at the daily, we're 22 over. We're 22 over from the 10-bar. Okay, the 10-bar, you can see here where it comes in around the 57.98. So we're 22 over. Normally the number is 50. So what happened when we got crushed? We went 50 plus. We went down to 280 points away from the price to the 10-bar moving average. That's why I was bullish all the way down there. Okay, and I just knew everybody kept on saying, "Oh, we're in the middle of bear market." I'm like, we're not in the middle of bear market because the monthly is still bullish. The monthly charts is still bullish. Okay, so when we got that low and now we pushed all the way back up, now we're 22 over. So now I'm expecting if we get another 40, 50, 60, 70 points up into that 50, 5850, 5880, 5890, 5900 range, will be 70 to 80 points above, and look out below. With that negative MACD on that weekly chart, I'm telling you, I've been around a long time. They're going to get a drop. Maybe that 5550, 5500 holds, okay? And it should, okay? But who knows? Right now, I'm looking for a push up, okay? Because the daily is going to reverse the buy tomorrow, that 5500 should hold here for a while. I think we get a continue going to push up, push down, push up. Good trading range, I'll tell you that. A great trading range. But I do think because of that weekly doesn't go negative and then positive a week or two later. It doesn't do it, especially since it took out the uptrend from November 17th of 2023. So everybody's going to get all bulled up here. We're going to look to short them on the next push up there. And I'm telling you right now, I think, we're going to be a nice little range. Eventually, what I think is going to happen is these weeklies, the MACD is going to get below the pivot. On the S&Ps, they're starting to. The spider's not yet. And I think we're probably anywhere between 1 month to 2 months before they go down below the pivot because they're a weekly. And then I think we're going to turn up. And I still have 6,500 as a target for this year. Let me show you some great patterns today. Again, me and this Tesla have a date tomorrow, boy. Oof. I'm telling you right now. All right. You can see looking at the 30-minute time frames. This is where the market really took off here today. Okay, on the 30-minute time frames. You can see here, okay, you can see when the even when the S&Ps got oversold, they went right into the 10 bar. I was like 94.5. Look at the low, 95. It was that's the type of day it was. Okay, I kept on jumping up and down like a baboon, saying that the 30-minute time frames are really setting up here. And I'll show you what I mean. Look at the strategy here. Okay, the 30-minute time frame after it reversed the buy at 10 o'clock, the 60 reversed the buy, creating a trend. Then you get the pullback right here at 2:30, right? Oversold into the positive MACD, oversold into the rising ADX, oversold into the big buying pressure. This was an absolute Picasso. I was jumping up and down saying they're going to go. The 30-minute time frames are going to explode, 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 explode. Okay, explode. Okay, all right. And then you can see when you got the oversold condition on the 30, the MACDs were positive on the 60. The ADXs were rising. Good buying pressure. Look at the yellow dots. The yellow dots, which is the price within the algorithm, nowhere near looking like they're going to go negative. Okay, amazing, amazing pattern. Okay, all right, amazing pattern. Okay, and when you see something like this, I'm telling you now. Okay, when you see something like this, these patterns repeat themselves. Okay, and this is exactly what I'm saying. That if you're able to identify this, okay, then you're able to achieve the consistency factor, right? And during the day, after we got the pullback on the 15, the second pullback was the 30, and now I expect tomorrow to get one push down and let the 60-minute time frame pull in. Or if we gap up tomorrow, okay, for any crazy reason, all right, and we push up to that 58.50, 58.60, and we get these overbought readings on the 30 and 60-minute time frames, then I'm going to look for a pullback. I'm going to look for a pullback, and that pullback should be rather sharp off the 60-minute time frame. These are the conditions that I'm looking for tomorrow. All right. Again, I'm going to show you another great pattern here on the IWM. Well, anyway, if I just show you the IWMs, everything had the identical same pattern here. Everything. Look at this. 207.63. Boom. They rallied here. $1.60. The diamonds. The diamonds. Everything repeated. Look at this. The Dow just rallied here about 150 more from that point, and the Qs rallied here 99 up to 91.5, ran $2.50. So it really was an amazing day. So many great patterns. MSTR, you can see here MSTR reversed to buy on the 15-minute time frame right here. And it correlated right here. It correlated with the 30-minute and the 60-minute time frame. What do you look to do? You look to buy the first pullback on MSTR 22. It never looked back on MSTR. Look at the oversold condition into the positive MACD. This was an absolute Picasso. on MSTR. The 15 correlated with the 30 and the 60. Okay, and then what do you look to do? You buy the first pullback on the 15, and then tomorrow. Now here's the pullback on the 30. So tomorrow, look at the yellow dot. So MSTR probably going to look to see if we get some type of a pullback here on the 30 or 60-minute time frame. Let's look at CRWD. How'd that do today? Up 11, reversed to buy on the 15 at the end of the day. Okay, but still negative here. But still, we're going to see what happens with crowd point tomorrow. Netflix, sure, this was up big, up 11. Now, Netflix, so like a couple of weeks ago, was below, where was it, 800. It was like 854. Netflix is up 120 points in 2, 4, 6, 8, 11 days. Netflix. Now, Netflix, you can see, is only 23 now. It made up that whole distance from the low to the moving average. Okay, now Netflix reversed, but this is exactly what's going to happen to the spiders and the diamonds and the Qs. Reverse to buy. Okay, you got a little bit of a pullback, pushed up. Ultimately, you're going to get a push down on the daily on Netflix here. All right. But again, let's look at the Russell. There's another great pattern on Russell off the 5-minute time frame towards the end of the day. That's the 4-minute. Sorry. Here's the 5-minute right here. You can see the 5-minute time frame, the 5 correlated with the 15, the 30, and the hourly. And look at the pullback here. Okay, 208.50. And then look what the Russell did. It rallied 60, 70 cents towards the end of the day. We had stocks like Palantir up, but here's the big ones. Apple reversed to buy on the 30-minute time frame on Apple. Apple reversed to buy, and then you can see the pullback. We were looking to buy stock below the 219.10, and look what Apple did. Look what Apple gets oversold into the positive MACD and the rising ADX. You can't ask for anything better than that. Okay? You can't ask for anything better than that. Okay? It's just unbelievable pattern. That's why I said I'd be looking to buy Apple below 219.10. Okay, and look what Apple did. If you look at the 30-minute time frame, 1, 2, 3, 4, 5, 6 bars ran roughly $2 on Apple. Again, oversold, yellow dots, beautiful, right? Into not even nowhere near reversing, oversold into the positive MACD, oversold into the big buying pressure, oversold into the rising ADX. Look at Microsoft today, reversing to buy. Microsoft here again, look at this beautiful pattern on the 30. Got oversold here again at 291.65, rallied roughly about 2. But you can see when Microsoft reversed to buy here on the 30-minute time frame at 10 o'clock, then you look to buy the next pullback on the 5, and then you buy the next pullback on the 15. And that's exactly what happened here in Microsoft. Here, it pulled in a load. It pulled in right here at the end. That was off the 5-minute, and then the 15, and then the 30-minute time frame aligned practically at the same time. All right. When I come back, anyway, so a monster day here today. So many patterns. The SDSs, when we got that first bounce, I want to let you know we called a great short on the SQQQs, and they dropped roughly about 75 cents. That was the pattern on the Qs. But at the end of the day, when you were making new highs on the Qs and the spiders, the MACDs did not confirm on the 15-minute time frame. Let me just show you this before I get into what I'm going to show you for tomorrow. Well, here's the short that I was calling right at the end of the day on the S&Ps. And you can see the high 575.15. They dropped roughly about 12 points on the S&P. You're making new highs and the MACDs are non-confirming. If we gap up tomorrow, I will tell you what I'm expecting for tomorrow. And it's going to be a lot of volatility. Today, S&Ps, we opened, they pushed down to 56.78, and then they never look back. When I come back, I will tell you what I expect and how to play the market for tomorrow. Okay, so tomorrow we have no 8:30 number, and 10 o'clock we have a consumer confidence number. Either way, I'm telling you, based upon this move up in the last week and a half, or the last week, I'm still looking, because of the weekly time frame, I am bearish. You cannot ignore that pattern. that pattern with the negative MACD. I am looking to see if tomorrow we get any push up and we get overbought on the 30 and 60-minute time frames. I would be looking to short them. I would be looking to short them because if we get up to that point, the S&Ps, if they got up to the 58, 50, 58, 60, 70, 80, anywhere up there, you're going to be north of about 50 to 60 points on the S&P above the 10-bar moving average. Imagine a week and a half ago, 2 weeks, within the last 2 weeks, we were 55.09. We were 280 points from the low to the 10-bar moving average on the daily. Now we made all that up and then some, and we're higher, okay? And we're higher, okay? So with that being said, that's what I'm thinking. Now, if the daily's reversed to buy, there's probably about a 70-80% chance that low of 55.09 is going to hold for a while. Not going to say forever, hold for a while, okay? So again, with the daily reversing to buy, it's going to correlate on the spiders, the Qs, the Russell, and the diamonds with the monthly chart. So which means if we do get a push up, we'll get a push down, we'll get a push up, we'll get a push down. Ultimately, today's gap will get filled. All right. Tesla, a week ago, I think last Wednesday or Thursday was trading 222, and they were doing, to Tesla. They were killing it, right? They were kabooshing it. All right. I still look at Tesla as significant overhead resistance. Somebody I saw put on a trade. So the June 330, the June 330 calls for 16. Well, the June 330 calls are probably 20 now. It wouldn't be a bad trade, to be honest with you, right? And I wouldn't mind being Tesla short at 330 or 350 on the strike, okay, for June. And because even if Tesla doesn't get there, the time decay between now and then, let's just say Tesla stays here or drops, within the next week or two, you may even be able to take out $4, $5, $6, $7 just on the price, the decay on the weekends and everything like that on that type of an option strategy. That to me is how I would trade options, because that's how I like to sell premium, and I look to have the decay. And I wouldn't mind being short if the stock did get up to that range. Okay. However, that's just an idea or a strategy. So tomorrow, consumer confidence at 10, no 830 number, like I stated. Again, we got the AVX is still rising here. The 60s are starting to roll over. So if we do get a pullback tomorrow on the 60-minute time frames, I'm a buyer. If we on the spiders, diamonds, Qs, and Russell, if we get a push up and we gap up with these negative MACDs on the 15, I'm a short seller, especially if we gap them up higher. I don't know if that's going to happen. Okay, if we do gap them up higher tomorrow, I'm going to be looking to short them, and then look for a drop. The 60-minute time frames, everything goes in sequence. It was a 15 to 30, and then I expect a pullback on the 60 for another push up. So maybe tomorrow we get a pullback and a decline here, maybe down to 57.80, 57.85, 57.75, something like that. The 60-minute time frames will set up the long on that, and then I think we're up and away from there. I want to just tell you, on Thursday's podcast, I said if we gap down on Friday, I said the MACDs on the 60-minute time frame are not going to confirm, and that's exactly what happened. Let me just show you this really quickly on the spiders on the 60-minute time frame. You can see on Friday, and I'll make this smaller here. When we gap down on the new low on Friday, you can see that the MACDs did not confirm the low. And this is why I said on Thursday's podcast that this buy divergence I thought was going to be able to push the market up. And that's exactly what happened. That's a buy divergence in a negative trend. So again, that's why it's important that, the types of divergence patterns that I look for, because all my strategies are all based upon divergence patterns. Again, tomorrow, I'm going to be looking for pullbacks on the 60-minute time frame on NVIDIA, Apple, Microsoft, spiders, Qs, diamonds, Russell. If we do get that pushed down, I'm going to wait for that oversold condition. Right now, it would take the S&Ps to drop 90 points from where we close just to get a sell reversal on the spiders. I don't think that's happening. But if we do get some type of a pullback and we get those 60-minute oscillators on the indicator 3 to get oversold, I'm a buyer, and I think we go up. If we gap up tomorrow, I'm going to look to short them, depending on where they get, and then I wait for overbought conditions. You have the sell divergences on the 15-minute time frames, and I will be looking to short them on any gap up or any overbought conditions. All right, that's the scenario for tomorrow. When we go back, I'm going to just tell you about an experience I had this weekend, and I want you to hear it. So I was invited by John and Pete Nigerian to speak at their RebelCon conference in Las Vegas over the weekend. I flew out there Friday. I wasn't here. That's why the podcast wasn't done on Friday. And I had a great weekend. And the weekend I had, everybody's like, did you have a great time? Did you do this? Did you gamble? Go see a show? What are you, crazy? I talked to so many people, my jaw hurts, right? But it gave me because there were so many people that I know that came to this, that went to this conference, and I was invited to speak. I was supposed to speak for 1 hour. I spoke for 30 minutes. I prepared everything. Billy and I prepared everything for the whole week. I got to speak for 30 minutes. But you know what? The 30 minutes was well worth it because I really got through to a lot of people on my methodology and what I'm able to do. But it was such a great joy. This is why I do this, right? To see so many people who have changed their lives, who have helped, and who are learning along the way. And that made the world of this difference. All my friends call me at night. So you're gambling, you're seeing any shows, you're having fun. What are you doing? You're having that. Are you crazy? I was in my room at 11 o'clock. Well, one night, Pete and John and I were so busy talking to so many people. So I think it was like 1 o'clock in the morning or 12:30 Vegas time. We went to go get a slice of pizza in the food court at the MGM. Us three. We were starving, right? As I would say in the Bronx, starving, right? And so we sat there, we ate. I bought them a couple of slices each, and then I went to bed. Where am I going? And next morning I got up and I had people to meet and talk to and help them along the way. Then I sat by the like outside for a little bit and talked to some people, great people. And then next thing I know, boom, I had to go upstairs, shower, get ready, talk on stage. After that, you walk to a little mini outside dinner with buffet. Then you're talking. A bunch of us met for a drink, just talking in a group. And then that was it, over. And then I went to bed. So it was a great time, and I really loved it. And I love being with people. And most of all, thank you for the opportunity, John, Pete. And thank you for all those I came to meet along the way. Great people. All right. That's it for the bull, the bear, and the ugly. Again, bull run here, up 97 on the S&Ps, up 400 on the NASDAQ. Thank you, everybody. Please leave a comment. Please subscribe to my YouTube channel. Follow me on X and Instagram at official Stephen Kalayjian. My cell phone number is 914-500-7484. God bless you, and God bless the United States of America. Be well, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.